Market recovers from morning lows with the mid-cap index up nearly 150 points, while banking stocks lead the charge to drive the benchmarks. Metals and PSU eke out gains, while IT and realty drag.
E2E Networks shares surge up to 15% in trade following Nvidia's announcement to collaborate with E2E Networks to deliver advanced AI factories. This marks the stock's biggest single-day gain on record.
Shares of Dilip Buildcon back in early trade. Company emerges as lowest bidder for a 700 crore EPC project. Order book continues to swell, now at 30,000 crore mark.
Aurobindo shares fall after CNBC-TV18 accesses details from the Form 483 issued to the company's Unit 7. The regulator observes that there are the microbiologist is responsible for sample collection, was found to have falsified sample collection data.
And Engineers India is in focus as the company is set to meet on February 26 to consider and approve a second interim dividend for FY26. Shares pair early gains to trade with marginal cuts. Good afternoon. Thank you for tuning in to Midcap Radar. The markets absolutely flat on the Nifty, but it has recovered from lows of the day. The midcaps, they are outperforming the benchmarks with gains of around 0.2%. It's the banking stocks which are pushing the Nifty higher. The IT pack, though, continues to languish.
Yes, in fact, let's concentrate on the entire IT space. Let's go across to the AI Impact Summit, where Amit Chadda, who's the MD and CEO of L&T Tech Services, is in chat with our colleague Shivani.
Have you seen which has actually revolutionized when it comes to originally seeing things and being present on the shop floors?
So one, it improves automation at all levels. Number two, it helps with scheduling. It helps with supply chain and raw materials. It helps with actually tracking goods within. See, when you look at a shop floor, these are huge plants. I mean, these are like, 500 meters by 200 meters, etc. So these large spaces have a lot of equipment, a lot of material. Tracking all that is huge. You can reduce wastage. You can improve profits. You can improve productivity. So we've been actually working with our clients globally in the US as well as Europe in implementing some of these solutions for them. We've been able to bring productivity improvements as well as help them deliver stuff on time for their customers.
Okay, you spoke about how productivity has gone to nearly 82% and you expect it to go up to 86%. Are there any verifiable metrics that you have seen which have led to this?
Yes, so if you look at, so the metrics we track is utilization in the IT engineering industry. And all of us almost every quarter report that. So that's the metrics to look at. Second, is a company growing without adding headcount? And if they're growing without adding headcount, that is the productivity coming into play as you look forward. So that's broadly how you look at it.
Okay. Speaking about LTTS and AI, what are the kind of, big goals that you have and you think that AI will help you, achieve them in probably this quarter or this next year?
Okay, so number one, we've already filed 250 patents in AI. I would like us to get to about 500 patents in the next 12 to 18 months if we can.
Okay.
Second, the company is pivoting on AI and growth. As you look forward, you can expect the company to deliver double-digit growth as we move forward, leveraging AI and the entire portfolio solutions that we've got.
But what is the size of the opportunity that you're seeing specifically in the Indian market?
So if I look at the entire AI stack, it's about $1 trillion stack. And in that $1 trillion, custom applications and services together is about 30%. That is what companies like us can look at to be able to try and work towards.
Okay, my last question to you before I let you go, Amit, is, we are seeing a lot of headwinds as well, but there are a lot of pros also for the Indian IT. What is the outlook? Where do you see the sector going this year?
So I'm very positive and bullish about India Inc. I was actually at the Senate about 2 weeks ago speaking to people in the Congress as part of the NASSCOM CEO co-chair forum. And what I can tell you is that people are very positive about India. India is seen as a scale partner for AI and technology for the world by our customers in the US and Europe. And I believe that this is our opportunity to rise and shine. We are at an inflection point like we were in Y2K. If I remind your viewers, in Y2K, people said once Y2K is done, IT industry will be over.
Okay, all right. That is some interesting commentary coming in from the AI Summit. It's a good time to get Ajit Mishra from Religare Broking for a technical check on the markets. Ajit, good afternoon. Thank you so much for joining in. What do you make of the market moves? You've seen a recovery from the lows. And if you can quickly tell us technical picks as well.
Yeah, good afternoon, Sunil. So yes, we are seeing that market is trying to rebound, but it's largely the heavy lifting is done by banking, which is continuously maintaining its positive tone when we are inching towards the record high with every passing day. At the same time, stability in the other sectors on rotational buying is also helping the market. But for any decisive trend, we need a decisive close about 25,800 marks. Then probably 26,000, 26,200 is something that the market is going to attempt. So as of now, consolidation tone is more likely with the positive bias as long as banking continues to perform. So here on the recommendation side, also the first recommendation from the private banking space, Axis Bank. So after this recent surge, we have seen a marginal consolidation around the record highs, and the stock is set for the next leg of the up move. 1450 is what we are eyeing as the immediate target. So with stop at 1330, one can go long in Axis Bank. Another stock from the metal basket wherein we are seeing continuous strength. The stock is trading at the record high, General Steel. So after this recent post the consolidation range breakout and a marginal breather around the record highs, we are again seeing the stock setting for the next leg of the up move. 1275 is what we are eyeing in this up move with 1200 as a stop loss.
Okay, all right. Any specific stocks or any specific stocks within, say, the banking space or the IT space that you want to highlight?
So Axis definitely is among the top name. PSU banks, they are doing well. So Indian Bank, wherein we can see that, this momentum continuing. At the same time, IT, I feel that still there could be possible consolidation or maybe further downticks in days to come, considering the kind of move that we are experiencing today. So for a time being now, if the view is short term, one should refrain from any aggressive bets on the IT bank.
All right, Ajit, thank you so much for joining in today. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, it might just be a very quiet market in terms of the frontline indices, but if you dig deep and you don't have to look too far, there are stocks such as NetWeb as well as E2E Networks, which are really dominating in terms of sentiment and news today. So NetWeb is up around 10-odd%. They've announced to the exchanges that they will be launching that Tyrone Camerero Spark, which is basically the world's smallest AI supercomputer powered by Nvidia. And we do have E2E Networks, which is also higher today. That stock is off the day's high, but nonetheless, it's up around 17-odd% at this point in time. After the tech giant Nvidia, in fact, announced it's collaborating with next generation cloud providers, including E2E. So as you can see, that stock is up around 17-odd% at this point in time. Both these stocks have been multi-baggers, gaining around 40% and, as you can see, 58% respectively on a 6-month basis. But that's what's taking place with both of these counters. But let's in fact move over and talk about the CDMO space. I had the opportunity to speak with the management of Laurus Labs and Sai Life Sciences from the sidelines of the BioAsia Summit in Hyderabad on what they make of the recent weakness that we've seen in the CDMO space. Remember, a lot of these companies have corrected anywhere between 40 to 70% just in the from their 52-week highs. So listen in to that conversation.
CDMO business, there will be established revenue from commercial molecules, a lot of clinical phase molecules. So the revenue coming from clinical phase molecules are very cyclical. So very difficult to quantify quarter on quarter. Even for commercial molecules, you have to see yearly numbers for CDMO companies, not quarterly numbers. Specifically, some companies are doing well, some companies are not so. It is company specific. I don't think you can attach that sentiment to the entire industry.
But there are, while you say that, CDMOs are showing lumpy quarterly numbers, there are companies which have completely cut guidance for FY26 and they're expecting FY27 to be better. So it's not maybe quarterly in terms of the lumpiness that you're seeing. Is it a growth issue for this guidance cut to come through for a couple of these companies?
It all depends on the offtake of the molecules, vendor diversification. If one vendor is enjoying majority market share and then a sponsor is trying to add another vendor, so it all depends on the de-risking from the partners, I would say.
Is it an inventory destocking issue? Because a lot of companies say that, this quarter or this year has been impacted by inventory destocking. Is that the case?
See, it is unfair for me to comment on the company specific because they know better. So I don't want to guess for that question. Yeah.
But as a trend in terms of the industry, what are you seeing?
Every company goes through inventory destocking. Depending on how much innovator will buy for launch, what market share he is getting, how much he is able to push into the market. So people go through that cycle, but I don't want to comment company specific on that.
Okay. From an industry perspective, Mr. Krishna, what are you seeing? Is this inventory destocking phase playing out for a couple of CDMOs?
So I think, look, people are losing the bigger picture because inventory stocking is a short-term story. I think the fundamental reality is that India is sitting in a situation where people are going from being tactical supplier to strategic suppliers, right? When you're a tactical supplier, you might have one or two molecules which have a disproportionate impact. But once you become a strategic supplier, you have a much broader base. And when you have a broader base, destocking is part of the game. Commercial volumes may go up, may go down. Your development molecules may go up and down. The whole idea is to build enough breadth and build enough strategic relationships that you don't have these huge swings. You will have quarter-to-quarter swings. That's just the reality of the business. Molecules fail, things fail. But I think companies only over time can build that diversity in their pipeline, both commercial and development, that at least the swings are not going to be pronounced on. I would say it's more a product concentration issue as opposed to destocking. Destocking is only it's a nature of the business. You need a big enough portfolio to kind of adjust for it.
What I'm trying to get at is that are the long-term drivers in place for the CDMO companies and for Indian CDMOs as compared to what we're seeing globally?
Okay, the long-term drivers are better than ever, but I think the reality is the expectations are higher than ever. So I think what people are forgetting is that people are judging companies from the past from being tactical suppliers to become a strategic provider. Tactical suppliers can get one-offs, successful, high-margin products, but strategic suppliers have to do a much broader range of technologies, broader range of capacities. So that actually we're in an investment cycle, and people think we're in the reaping cycle. So you have to be very careful what we wish for. I think we're the early phase of a multi-year growth cycle, but that's going to be playing out in the next 5-10 years. I don't think you can judge 1-2 years. We're just a little bit hyper because we've seen the, what do you call, biosecure XYZ.
Yes.
But this is a 5-10 year cycle, and I think everything is intact in terms of that cycle.
So the Biosecure Act, it doesn't name companies in specific. So is it a diluted version as compared to what was expected? And do you think that's going to play out?
So the Biosecure Act itself is irrelevant anymore. I think now is global diversification is relevant. Geopolitics is relevant. China as a competitor is relevant. So I think Biosecure Act was probably a noise factor, but now it's almost like by default, people have to have geographic diversity. I think people have moved beyond that. China is a competitor, and you cannot have 80% of your supply chain in China, which is a competitor.
Correct.
So I think the diversification is here to stay. So I think the Biosecure Act is immaterial at this point, in my opinion.
Okay, so these RFPs, which a lot of the CDMOs have spoken about, that you've seen a large amount of RFPs come through, is that now converting into tangible business and P&L?
Let me just, RFPs are being overplayed. I think people who really are building strategic partnership don't use RFPs.
Okay.
They deal with relationships, and they're dealing with one step at a time. I know companies have come and said, love to give market guidance for RFPs. A lot of people give RFPs for no reason whatsoever. It's really about the relationship you have with the customer. If you have a relationship with the customer, you get an RFP, that's a serious RFP. If you don't have a relationship with the customer RFP, that's just a testing of the waters.
Okay.
So I think the market has to start moving away from the RFP numbers. I think you really have to look at the strategic pipeline you're building, customer base you're building. I think, unfortunately, we got in this whole equation of trying to measure predictive metrics, which are not really predictive. And it's unfortunately we're guiding the market in the wrong direction as well. And I think the only way we can get the market is, like I can say Dr. Chava has done, we have done. We put a lot of time in the trenches. We didn't come here like overnight. We've been questioned multiple times, so why the hell are you doing what you're doing? But that's what it's going to take. This is a long-term journey. This is not like overnight win. Just because I'm in India, I'm not going to get RFPs which are going to convert overnight. It's a 10-year, 15-year journey. I think that's what the market is missing at this point.
Okay, all right. Very interesting comments coming in and putting everything into perspective that maybe the Biosecure Act is not as relevant for CDMO companies, and geographic diversification is something that the companies will be working with. Companies such as Cohance as well as OneSource, in fact, have seen a little bit of traction on the upside. Cohance, for example, is up around 6% at this point in time. We'll take a short break. Lots more on the markets once we're back. Stay tuned.
Welcome back. 25 points lower on the Nifty. We are below the 25,700 mark for now. Mid caps are outperforming, up 0.3%. A lot of action in the broader markets. Godfrey Phillips, for instance, is up 16% as we speak. We have transformers and rectifiers as well, up 10%. Cohance Life Sciences is up around 7%, and HEG also adding on to the gains that we've been seeing. So a good day for mid caps and small caps so far, but we'll keep tracking the market moves for you. For now, we'll take your leave on this edition of Mid Cap Radar. Your stocks when we return.